with last year's numbers, which was nothing, because it's a brand new business. And then this year's number, 2009. And then I'll always have a change column out here. How much did we change from year to year in comparison? Well, this year it was just the exact same numbers because I started with 0. So that's not going to be the case, obviously, in the future years. I also give us the second thing I told you. We need an income statement. And then any notes at the bottom that I also need to know, because one of the things is if a dividend was paid. And in our company there was. Dividends don't show up on the balance sheet, so I have to tell you about it. First thing, always like our title of all the financial statements. We start our first section, the operating section, and look back. What is the first thing, what's my base thing that I always start out with on every statement of cash flows? I'm going to start with the net income. That'll go out there in my total column, just like we did with revenues. We had a total column and then a subtotal. And then I always look for two things on the income statement. Depreciation and gain or losses. Notice I don't have either of those this year. What's one big clue on why I don't have any depreciation? I can't have depreciation because...
You just started the business.
True, but even if I just started, I could have depreciation. But there's no way I can have depreciation in this business because
You don't have any equipment.
I don't have anything to depreciate. That's exactly right. If you look at your buildings and equipment, there's nothing there. So I don't do anything for those first two income statement items that I always have you look for. Next, so we go down the list. Next, we look for any current assets that change. However, we don't do cash. We do cash at the very end. So we look at AR, accounts receivable. It went up by $25,000. Well, one of the main reasons accounts receivable would go up by $25,000 is because of a journal entry that looks like this. So when you see revenue of $75,000 in my income statement, how much revenue in cash did I really bring in? I didn't bring in $75,000. I brought in how much? Cash-wise? 50, yeah. So I'm going to need to show that. I shouldn't have, I don't want to show $30,000, I mean I do, in net income, but I got to show my people reading this that, well, of that 30, part of, the revenues, some of that didn't come in as cash. So let's take $25,000 off of that number. And this is how I want you to list it. I don't want you to just put AR and then the amount over there in the subtotal column. Tell me what the AR did. It increased. And then we see if we have any other current assets, and we do. We have inventory. And our inventory went up. That means I paid for it. And that's what we assume for right now. If my inventory goes up, I paid money for it. We don't know that exactly, and we'll correct that when we look at the account payable. But for right now, we just assume we paid it with cash. So if any current asset goes up, that means my cash goes down. And remember why, back to our two questions. If inventory goes up by $15,000, this isn't showing up anywhere in my net income to make it look like I paid money. My net income doesn't show either of these two accounts. But I really did spend money, so I need to show it here. I don't have any more current assets, so I do the last item, current liabilities. And current liabilities went up. Remember, that means it's acting like I saved money. Liabilities went up. Maybe part of my wages, maybe part of the wages, I'm assuming I lumped all the wages into accounts payable, but maybe part of my wages expense, part of it wasn't paid yet. It was a payable. Or any of the other expenses, maybe they were a payable as well. And I didn't really spend that money. So as of right now, I've saved $15,000 in cash, at least temporarily. Then I'm going to total. And this is the, I'll pull it up a little bit. This is the total, this is the wording that Wiley Plus uses. And the key thing that you'll see in the next example as well. The key wording here, whenever that thing in yellow, the total number, if it's a positive, we put net cash provided from. If it's a negative number, that total, we put used for. That's the only difference. Everything else will be the same. Net cash used for operating activities or provided from operating activities if it's a positive number. So in the drop down, it'll give you both. Net cash provided from or used for operating activities, and you just gotta pick the right one. The next section, investing. I look at my balance sheet, long-term assets. There isn't anything going on in the investing part of my business yet. For whatever reason, maybe I'm just too new. So there's nothing to put here on this example. Positive or negative. So we can go to the third step. Long-term, remember this is long-term liabilities and owner's equity changes. I didn't have any long-term liabilities. My bonds are my only example of long-term liabilities, and that's 0. But I do have common stock. My common stock went up $80,000. If your common stock goes up, and unless you're told otherwise, what did you do, what did you get when you sold common stock? Cash. So if I issue common stock, which I did, I got money, and I need to show that. Remember, we don't look at retained earnings. We might as well just cross it out. And I'll tell you why after this next step. We issue common stock, but that's not the only owner's equity item I have. I have one other owner's equity item. And that's down at the very bottom in the notes. The dividends. If I pay a dividend, that doesn't show up on my net income that I paid money. I want to show you now why retained earnings doesn't go on here. And that's because everything in retained earnings has already been accounted for, as you'll see. I tell you that beginning retained earnings is 0. Ending retained earnings is 20,000. What gets included in retained earnings? 3 things, typically. Remember what goes into retained earnings at the end of the year?
Dividends?
Okay, put that down here. It's my D.
Expenses?
Expenses
And revenue?
and revenue, red, your red accounts. Revenue, expenses, and dividends. These 2 numbers are what? Revenue and expenses make up my net income. Net income is on my sheet. It's already on here, the very first thing. Dividends, they take away from my business. The 20,000 was already accounted for. I already shown this, and I've already shown this on my statement. So there, if I would show the 20,000 again, that would be duplicating, doing it twice, and I don't want to do that. Now we get down to the final check. Beginning cash for the year was 0. I didn't have anything. If I add up all of the yellows, all of my totals, 75,000. And then typically you would add these two, but there's nothing to add to it. So our total is 75,000, and that does check with my balance sheet final 2009 balance. That's my checkpoint. Number 52 is the same business. If you notice, the 2009 balances are just transferred over same things that I just ended with. And I've updated now to show our 2010 balances. Give us a new income statement. And then I've got a couple notes down there at the bottom. It's one of the things you'll see is we got land, we got buildings, we got equipment. And it tells us in the notes that all of those assets were bought with cash. So nothing was put on a note. And it says, and it shows there the bonds. My bonds went up. It tells us we got cash for those bonds as well. One thing you're going to find, there's a couple numbers you never use on the statement of cash flows. Retained earnings is one of them, so you might want to just always mark that one out, that you've done it. I like to go through and every time I've updated like AR and I put it on here, I mark it out in the net change. The other item that never gets used is the accumulated depreciation. You always look to the actual expense in the income statement. Don't use the accumulated depreciation numbers up in the balance sheet. In year one, like this one, the first year you have an asset, yeah, they match. You add up the 5 and 6, they do equal the depreciation total. But as you'll see in the future years that we have, that's not going to be the case. So we never use the accumulated depreciation numbers. Now you're going to work this one on your own and do the operating activities and then stop. And I'll give you a check figure. Your total number when you get to the total operating should be $62,000. See if you get 62,000 and I'll start walking around and see how you're doing. Now, if I were you, I wouldn't necessarily follow last year's example because this is a more complex problem. We've got new stuff added in. So if you only do exactly what we did last year, you're going to come up short. Go back to that first sheet when I said exactly what goes on the form. I'd use that as well as a guide. You can use last year's as a guide, but don't follow it exactly, I'll tell you. So starting with the net income, I always look for two things: depreciation expense, gain or loss. I had one of them this time. And then I look for the current assets changes and the current liability changes. Well, because land isn't a current asset.
So we only take the depreciation as from the income statement, we never.
That's
take
it,
out as-
ever.
That's it.
You better just mark out the other two.
Okay.
And you might as well mark out retained earnings, because you're not going to use it. Go on to the investing activities if you have this up to date now. One of your investing activities would say purchase of land. We bought land, obviously, from 0 to 50,000. And a lot of money. all of our long-term assets went up because we bought new stuff. And it tells us in the notes that they were all bought with cash. And that'll come into play next year. After this year, I took it kind of easy on us. The next year, I add a little bit more detail. And then, of course, the wording here, used, that's what Wiley Plus is gonna, if there's a negative. If you were marking everything out as you go through, all of your current assets are marked out. You marked out all of your land and buildings and equipment. Accumulated depreciations would have already been marked out. So all of your assets are marked out except cash, which we get to last. Accounts payable is marked out. We already did that. Retained earnings is marked out, because that's one of the first things we never use that we can mark out. So the only thing that's left, along with our notes, is the bond had a change, and then we had a dividend in our notes that we haven't had to mark out yet. So you should have two things in your financing activities. If you issued bonds, and your bonds went up that you owe, and it tells us that we got cash from our bonds, so that's going to be a positive 155,000 right there. We had bonds, and then we issued a dividend, $12,000. And in case you're wondering, I can also explain the difference in retained earnings on why it's not showing up. I started with 20 from last year. I ended with 66. Well, part of that came from my net income, which was 58,000. And then I paid 12,000 in dividends, which also gets closed. 58,000 gets closed because that's revenue and expenses. Dividends gets closed. If you total these two, that's 46,000 and changes. So that does explain where the 66 came from. That's why retained earnings isn't on here. And then we do the final section to see if everything ties out. Beginning cash, we did have beginning cash. And then if you add up the three totals, financing, investing, and operating, they should total $15,000. When I add those two up, I get 90,000, and that better equal what my 2010 cash is, and it does. So it checks. Enough time to start 53. 53 is where it gets, 53 is more like test level. This is about the how hard, maybe just a bit harder, more like 50. 54 is really advanced. Somewhere between 53 and 54 is about how hard I make the test. And it really helps to look at the notes before you ever start one of these always. Couple things to, so we know when the bonds change, see the bonds went down. That means so if bonds go down, that means I owe less, typically. So I received money. I had to pay money. Land was sold for cash at book value. Why did I have to put sold for cash at book value? Why did I have to include that little at book value bit?
Because of the gain or the loss you got there.
Yeah, so did I have any gain or loss?
Yes, you had a loss.
No,
No, gain.
you sold it at book value, so it's whatever it was on the books for.
Yeah,
So
so
there's
no
no-
gain or loss. I sold land worth 15,000 on my books, and I sold it for 15,000. So the journal entry would have been cash debit of 15, credit my land for 15, no gain or loss. However, it's a different story with the equipment. And if I was doing this, I would, whenever I have some stuff going on, I've got to be able to visualize what happened. And what I want you to be able to do here at the bottom of this sheet is, what would the journal entry have been? Show me the journal entry on the sold equipment of 20,000 cash and all the other information that I give you about it. Don't do the bot one yet. What's the journal entry that would have happened when I sold that equipment for cash? Think about it for a minute. Write down what you think would have been the journal entry. What did you get, and how did you get it? Because if you don't do little journal entries to explain your notes, then you're not going to be able to do the statement of cash flows when they're more complex like this one. Brandon, what did I get when I sold the equipment? What's my debit?
I was writing down this stuff so I can't find the thing. I have the other stuff pulled up, but I can't find the actual sheet for this one.
Number 53?
Yeah, I have the one we were working on, I was copying this down, but I don't have the actual, I can't find it on Blackboard.
Do you go into week 15?
Yeah, that's where I'm at, and I just got the Excel sheet we've been working on.
Yeah, did you look down at the bottom in the tabs? Tell me.
20,000,
20,000 what? Building?
no cash.
Cash? So at the bottom of this sheet, where I have that space, I would put this journal entry in to help explain that entry. I had a debit of 20,000, okay? And Melissa, why did I get 20,000 in cash?
You sold equipment.
Okay, so what am I gonna show here as my other debit and credits?
Well, you would credit your equipment,
Okay,
20,000. I don't have it in front of me, because I didn't, my computer died. I didn't print up. But,
so you came unprepared.
no, it died in the middle of the day.
Shelby, how much equipment did I get rid of?
You technically got rid of 21,000, right?
Not quite, no.
25?
Yeah, 25. I have to get rid of the equipment at what it actually cost me when I bought it. Now, I tell you that the book value was only 21. So that means if I tell you something has a book value of 21,000, but it's listed at 25, the other 4 come from where?
Gain on disposal.
Trent?
Would be depreciation, accumulated.
Accumulated depreciation, yeah. Remember, if book value equals the cost minus how much you depreciated. So that's those what those two numbers have to do with. So I've got to take off 4,000 over here. What's left? My journal entry doesn't equal yet. So I'm going to have a what left? What's left? Sarah?
Maybe a loss?
Of how much? Yep. Loss on disposal. If I look to my income statement, you see an other category. That other category would be your loss. I didn't want to come out and just tell you what it was, but that's what it is, and that's where that 1,000 came from. Right here on this journal. And then I could also do that second journal entry, bought equipment for 47. That one's a lot easier to do. Equipment went up by 47,000. And I paid cash for it. If I total up my equipment, that explains where the 62,000 comes from. The 40 I started with, minus what I sold, plus what I bought. So I've now explained the equipment by these two entries, and these two items are going to need to go in my investing separately. But we'll get to the investing shortly. So let's just start, and then let's just do for a minute here the operating section. Obviously we have an operating, and we have net income of 80,000. So we're going to pick it up from here on Thursday, starting with 2011's statement of cash flow, knowing that we have these journal entries that we're going to need to work in.